Hello and welcome to CMC Markets Trading Outlook for the week of March the 30th, 2015. My name is Colin Szysinski, Chief Market Strategist. Our topic this week is gold and oil at the center of the storm. Coming out of a busy week for trading, and into another one in a busy week for news, even though it's short, we're seeing that there's a lot of moving pieces, a lot of volatility potentially in the marketplace, and the crucible where everything's coming together is in the gold and the oil markets. In the week that just ended, we saw some consolidation among stock markets, but we've had a very volatile week for crude oil and gold, where we saw big rallies for both on Thursday on increased political risk in Yemen as Saudi Arabia started to get involved, and word got around that other countries might start to get involved in the civil war, and that could potentially blow up into a wider struggle between nations. At the same time, then when some of this started to ease a little bit, we saw those markets coming back down on Friday. Heading into the new week, there's a lot of potential news out there that could move the markets. First of all, the situation in Yemen has not gone away. Yemen sits astride a key transit point. There's straits between Yemen and Africa is one of the main transit routes for oil from the Persian Gulf and the Indian Ocean into the Red Sea and onward to the Suez Canal and the Mediterranean Sea. So that's a key point for transit, and because of that, the what's going on in Yemen with the civil war and other countries potentially getting involved could move the oil markets throughout the week, either upward or downward, depending on what happens. We're also seeing that the moves in the oil market are also spilling over into other markets. So on days where we saw the political risk starting to increase, we saw flows of capital going back into defensive havens, out of stocks and back into things like gold, the Swiss franc, and the Japanese yen. On the other hand, if we did see some of these political risks start to fade again, then those markets could start to trim back, as we've seen with gold here on Friday. The other thing we're seeing going on is this week in Europe is more, of course, more discussions around Greece. Greece is supposed to come out with their package of reforms and continue to work toward a deal to keep them solvent and in the eurozone. Anything that suggests increased financial or political risks could push up gold, particularly against the euro. On the other hand, if we do see progress towards a deal, we could see stocks pick up and gold drop back. So gold and oil really find themselves at the center of a lot of what's going on. On top of this, we also have a big week for data. It's the last week of the month and the first week of the month. So kicking things off, we have a number of employment reports coming out. And the big one being US nonfarm payrolls. But this week, because of the way that the Friday is a holiday, of course, in most countries, and but U.S. non-farm payrolls are still coming out. They're coming out at 8:30 a.m. Eastern Time. The futures markets and our CFD markets are actually open until 9:15 a.m. So there is 45 minutes of trading on Friday morning after the U.S. non-farm payrolls come out in U.S. indices. But because stock markets are closed, a lot of traders may actually focus their attention more on the ADP payrolls report, which comes out first thing Wednesday morning on the 1st of April. So we could see quite a bit of action in U.S. markets around that report. We also have purchasing managers coming out, plus we have employment and other numbers coming out from Europe. We have German employment, we have unemployment and consumer prices for the Eurozone, and a number of other key data points. So those could also move the markets around over the course of the week. We also have some significant data coming out from Canada with the GDP report, as well as producer prices that could impact trading in the loonie. So as we go through this video, I'll highlight a number of charts and where client sentiment is at across several markets around the world. But overall, what's key to note is this looks like it could be a really big week. Even though it's only 4 full trading days, we could see a lot of volatility and a lot of action in markets around the world, particularly centered around gold and also crude oil. We'll start with the gold and crude oil markets here, where and I'll begin with gold, and we have our client sentiment as well. I'll bring the chart up. Actually, let's start with client sentiment readings for gold and for crude oil. And what we're basically seeing with them is gold people are still pretty bullish. The the gold has a nice tailwind behind it now of the ECB's quantitative easing program, and comments we've seen out of ECB President Draghi have been supportive, suggesting that so far the QE program is going well, that the ECB is working to rebuild its balance sheet. Gold has been following the ECB balance sheet up and down, and looks like it may be starting to follow it back up again. So that does put a bit of a floor behind gold for the moment, anyways. Gold can also be impacted, of course, by shorter-term fluctuations in political or financial risk, whether Greece or Yemen or elsewhere. In terms of clients, we've got people are pretty solidly long, 83% in terms of number of top clients and 75% in terms of positions being held. The crude oil continues to bounce around basically between 45 and 55 in US dollars. Currently here it's trading about 48. It in the run up on Thursday on the Yemen political risk and supply concerns. It actually did get pretty close to 50, but could not break through. So that was quite significant in that it suggested that the downtrend's intact here. Now, something interesting here, we have in terms of number of clients, we have 76% long for all clients, 79 for top clients, but position value we have is only 64% long for all clients and 57% long for top clients. So that suggests that the people that are long are not taking on huge positions. They are taking on smaller positions, and so this suggests perhaps a lack of conviction that we're not seeing. People think that perhaps we're not seeing a base forming in crude oil. It could still go either way, and that we're really in a consolidation trading range where it's getting bounced around quite a bit from day to day, and people are more likely taking advantage of these short-term swings and trading back and forth rather than committing to one side or to the other. So let's take a look at the gold and crude oil charts now. Starting with gold, we can see that we were in a downtrend from about middle of January through to about the middle of March. We've broken out of this in a pretty significant way. We have an upward gap here. We've continued to carry forward, shot up above 1200 here, and now it's back consolidating in and around the 1200 level, basically having an inside day, normal consolidation after 1, 2, 3, 4, 5, 6, 7 days of solid gains for gold. A pause here around 1200 is not unusual. On the RSI, we'd been overbought, we'd been oversold, we've broken this downtrend, we've broken 50. Generally speaking, momentum looks like it's turning upward for gold. It has faltered here at 60. If you start to move into a 40 to 60 range, would suggest perhaps maybe we're moving into some kind of sideways channel. There's some support here around 1185, and this resistance up here is around 1220. So maybe we're moving into an 1180 to 1220 range in the short term is a possibility here for gold. We'll now look at the crude oil chart. And this shows we're still in a sideways trading range for crude. But slowly but surely for the last month or so, we are starting to see lower highs emerge for crude oil. And but we are also seeing here, this is 60 on the RSI, this is 40 on the RSI. It had gotten oversold at the bottom of this channel, but this failure to clear 60 suggests that we're still basically in a sideways trading range for crude oil. But day to day, as we've seen, it can still have 2, 3, 5% moves in either direction. So it does look like it's still an active market, presenting a lot of opportunities for short-term trading. Let's move on now to equities. Equity markets have leveled off, and sentiment is a little bit more mixed. As we can see here, we've had a bit of a pullback. We had a bit of a pullback in the markets on Thursday. They're kind of settling out near on Friday. What's interesting here is we've had a bit of a pullback in the DAX, and we've had a big jump up in terms of top client positions in the DAX, a 20% increase today. And on the other hand, it's only a 3% actually drop in terms of the number of clients long on the DAX. So as it suggested, that some people seem to be in there buying the dips and have taken on some positions in size, trying to take advantage of the correction that's been underway lately. The U.S. is a little bit more mixed. There's some question about still whether when the U.S. might actually start to raise interest rates. So what we're seeing here is we've actually got a net short position in terms of position value, but a net long position in terms of number of clients. This suggests a lot of indecision. People aren't quite sure which way the U.S. markets may be going here, and we've actually seen a trimming back of short positions here, which suggests that some people might be covering their shorts as the markets have come down and starting to look to nibble away or go bargain hunting. So also something to note here, even though this isn't net short, it has been coming down over to the course of today. So if we move now and look at the indices, we'll start with the US 30. And we see here, interestingly enough, this is almost a double top here, and we are starting to see it roll down. 17,730 is a 23% Fibonacci retracement of the rally up off the October low. That's now become resistance. It's been tested. We've got a doji candle in here suggesting that maybe we're into a bit of balance here. The bears have dominated for the last 2 days. Today it looks like they've taken a break anyways. But unless we start meaningfully getting back above 17,730 and taking another run at 18, it does appear vulnerable. This support here is 17,560, and this line here is 17,380. At which point you're also getting down close to the 200-day moving average. The RSI in a downtrend suggesting slowing upward momentum. Lower highs, it's rolled back under 50, suggests momentum's turning downward. At best, you might be going into a sideways trading range on the RSI, perhaps a sideways trading range for the index as well. Let's bring up the DAX now. And similarly, we're seeing that like the U.S., it had a big run here. It's come off. It has not come back to challenge and complete a double top like we've seen in some of the other indices around the world. So at this point, maybe it gets another bounce, maybe it doesn't. If it falters here and doesn't get back above 12,000, then we could be looking at an emerging correction here. This line of support here is around 11,775. This tail here around 11,625, and this Fibonacci retracement is about 11,510. The RSI is telling us it got pretty overbought, so the pullback is a normal correction of this. But as it drifts back towards 50, is also telling us that upward momentum, this big uptrend here, is starting to slow down, and this is starting to level off, just like we've seen with the U.S. indices. We'll now take a look at action in currency markets around the world, which may also be active on not only the data, but moves that we could potentially see in the euro, the US dollar, and other markets. So it does look like we could have quite an active week for currency trading as well. Just a quick peek at the client sentiment here on euro dollar. Even though it has bounced back lately, the clients have generally remained short on the euro dollar, which is quite interesting. Today, here on the Friday, it's holding steady, and yet what have we seen here? We've seen a significant jump in short positions in the euro US dollar. So this is suggesting to us that clients are maybe now starting to think that this latest rally has run out of gas and that perhaps it's due to fall back again, because we are seeing a fairly significant jump. And what's interesting is the number of clients versus the position size. The position size has grown quite rapidly, so people are starting to step up their conviction and their position sizes on the short side against the US dollar here. So people do seem to be looking for a bit of a correction in the euro. Also, dollar CAD, we're looking here is getting down towards about 50-50. We are seeing long positions, people thinking that this would go higher, are starting to come back off a little bit and getting trimmed. All clients down 14% today. Top clients still net long, and but dropping back. And of course, long positions in dollar CAD mean people think the US dollar will go up and CAD will go down. So that means that as we've seen it start to drift back towards 125 here, that in fact clients are starting to see this as potentially topping out and perhaps ready for a correction, particularly if we do see crude oil start to stabilize or even start to recover. And the loonie also could be active during the week with Canada data due, GDP and inflation reports. So that could be an active market. But let's start the charts here off with the euro dollar. And as we've seen here, it's been in a pretty significant downtrend lately. We had a nice upward bounce here out of a really oversold position on euro dollar, but look at this. It got back up to 50 on the RSI and stalled. What does that tell us? It tells us that this was downward pressure easing, but not enough really follow through in this yet. And this now is looking more like a bear market correction than the start of a new uptrend. So what do we had to the last time it got overbought, it moved into about a 109 to 115 trading range. This time around, this is about 104.50 up to about 110, and this may be an emerging trading range as well. If that's the case, we could see this start to roll over. Right now, it's hanging around 108.60, this Fibonacci level. Upside, this is about 110, a round number, and Fibonacci, and the downside initial is about 107 even. So it does look as though euro might be rolling over here, starting to resume its downtrend. And just as the euro has struggled to get very far after a nice rebound, sterling is having the same problem. Even though the Bank of England and Governor Carney was out talking about how they still expect their next move to be an increase in interest rates, the street doesn't seem to be buying into it too much here. We do have some downward pressure easing out of an oversold situation, so a trading rebound here, but the trading rebound has been contained by $1.50, former support level, big round number, now becoming resistance. Unless you can get back up through 150, it suggests this downtrend, broader downtrend, remains intact. It's really got to clear this. If it does, it could take an initial run up towards 152. If it fails, the first support here is about 148.10 and then about 146.90. So at this point in time, this broader downtrend for euro does remain intact. Or sorry, not euro, for sterling, unless it can get back above $1.50. Let's take a look now at dollar CAD. As I discussed, this has been having quite an interesting time of late, basically because of what's been going on with the oil price. Now, this has, as oil has gone down, US dollar has been gaining on Canadian dollar. It's interesting here. It looks like we have a double top in place here at $1.28. It's come down as low as $1.24, and today has peaked back up above 125 a little bit. The RSI here looks like it's stabilizing in and around 50. It looks like we're into a sideways trading range for this between 124, 128, and this first real resistance is in and around the 126 level. We'll now take a brief look here at the Australian dollar and the Japanese yen. Let's start with dollar yen, because with all of the news coming out, particularly the payroll numbers, we could see the US dollar be quite active, and that could influence trading in some of these other markets as well. So the yen has been in a sideways channel for quite some time. The low is about 116, the high is just below 122, and 120 is also a pretty significant round level. Having come up here and completed a big double top around 122, the dollar yen has been drifting lower, so US dollar has been weakening relative to the yen. RSI also showing weakening for the US dollar relative to the yen. Momentum starting to turn downward. 120 was support, it's now become resistance, and it continues to fall away from that. Next significant support here, this is around 119, and this Fibonacci level is in and around 117.85. We'll also do the Aussie dollar here, and actually I'll also show the Aussie 200 before we wrap up, because these markets could be active as well if we start to see resources move in a significant way. So actually I'm going to close that and bring up the other Aussie dollar chart. So Australian dollar here has been under pressure along with other resource markets through the latter part of last year. It does seem to be bottoming out here in about a 75.50 to 79, say 79.40 trading range here. Midpoint in and around this, which is around 77.50, and we've seen it had gotten pretty oversold. We have had a bit of a trading bounce here. Momentum's trying to turn upward, but it is still struggling to break out of this channel at this point. It appears to be base building, and but we'll see how it acts from here. On the other hand, the Aussie dollar, Australian stocks had a pretty solid run, but they're starting to look tired here. big run up at the beginning of the year, double top in place, could not break the 6,000 round number, starting to fall away from it. It's dipped below 5,900. This 23% retracement is about 5,790, and as we can see, it had gotten overbought. Lower high on the RSI suggests slowing upward momentum, drifting back towards 50. We start going below, it could signal a correction. For now, it looks like we're still in a sideways trading channel here, but working our way down within that. So we do have a fairly short week, but all the same, it does look to be a very busy week. There's a lot of data coming out, and on top of all the data, we also have other factors that could cause surprises at any time. Whether it's the situation with Greece and the eurozone, the situation between Yemen and Saudi Arabia and Iran and Egypt and other countries that may find itself getting involved, or something else could come out of the blue. So it certainly looks as though it could be an active week for trading.